Welcome back, folks. Dow Industrials finished down 200. We had the NASDAQ down 81. S&Ps are off 24. And let's go over to our man, Mr. Chris Gaffney. Chris, folks, is the president of Everbank World Markets. You've heard of him many times. You can come over to our website at TFNN, and on the right-hand side, you're going to see the Everbank banner. Hit that banner. We're going to be talking about the 5-year market-safe focus commodity CD today. We have the Fed minutes coming out tomorrow at 2 o'clock. Now, this focused commodity CD, folks, okay, has 6 commodities inside it. It has gold, silver, copper, nickel, soybeans, and sugar. They put them in a basket. Bottom line, it's a 5-year CD. The minimum deposit would be $1,500. The maximum is whatever you'd like. The deadline for this particular CD is October 13th, which is in a couple days. It prices out October 24th. We're going to let Chris talk about it. The amazing part about what Everbank does with these market-safe CDs, folks, is that your principal is 100% protected. It's an FDIC-insured product. It's IRA eligible. And Chris Gaffney, welcome back to TFNN.
It's always great to be on here, Tom. And the key, as you said, and we've talked about before, is that principal protection. And what this product gives listeners the ability to do is to invest in what can be a pretty volatile market. I mean, we've seen these markets swing back and forth here just over the past couple of weeks with all the Fed talk and rumors talk about interest rate increases or decreases. What this does is it gives you the ability to take an interest or actually invest into that volatile commodity market with no risk to your principal. So that's why we think it's a great product for people that want that possibility of an upside without any risk to their principal.
Right. And what happens, folks, is this. So picture the way this works. That you bring the money in by October 13th. 13th. I believe the value date is October 20th, I guess, right?
That's when we're going to initially set the prices, right, Tom?
Okay.
And we're going to take and measure the price of those 6 different commodities that you mentioned: gold, silver, copper, nickel, soybeans, and sugar. And then we're going to compare those prices on an annual basis to those original prices.
Right.
And your return on this CD is going to be based off of those returns. Now, we're going to cap those annual returns out at 50%. So after 5 years, the maximum you're going to be able to earn on this is 50% over those 5 years.
Sure.
But that's still a really good return in the current environment. And, again, your principal is protected. So,
and it's so cool, too, Chris, right? What happens, folks, in commodities, right? You get a picture of something. Commodities, folks, well, hey, listen, the markets are going up and down. I could make a case, folks, that we haven't gone anywhere since 2000 in the markets. But what happens, which is so cool with this product, is that every year, folks, what happens is that they get a new pricing, and every year, bottom line, you can get up to a 50% rise in it. Those numbers go in the pool, and then every year that gets there's a new start, okay? So it's so cool because that's what, that's what markets do, but that's what commodities do too. So you can have a couple good years, you can have a couple flat years, and guess what? You might do very well.
Average it all out.
Yeah,
and we've mixed up the commodities in this latest issue with, we've got the precious metals, we've got some industrial metals, and then we've got the softs, the soybeans and sugar. And, they all trade under different scenarios and in different ways, like you suggest. So you can have one be a star and the others kind of hold back for a while. I think there's some demand that we're going to see, and, with the changing diets we're seeing in the emerging markets for soybeans and sugar. sugar. We've made a case that, China is starting to recover, and with all the massive amounts going into infrastructure spending, I think you can make a case for the industrial metals that, copper and nickel are going to be in demand. So, and then there's the precious metals with all the money the central banks are throwing at the markets, and the printing presses are running on overdrive. There's a good case that you can make for owning some precious metals and owning some hard assets. And so again, I think that there's a case you can make for all 6 of these different commodities. And again, if with the averaging and with the principal protection, it's a great way for investors to add some exposure into their investments, and even their IRA, which it's tough to get commodity exposure in an IRA, and this is a great product to do that.
And this is a great point that you're bringing up too, because what happens, folks, is that the only risk that you're taking here is you're taking an opportunity cost risk that if you went out, if you're in the CD market and you take a 5-year CD, I don't know what that exact number is, but I suspect it's not over 2%.
Right, it's right around 2. Yeah.
Right around 2. So that is, that's an opportunity cost. But when you take a look at that, you're getting a principal back, and you have the opportunity to get something more than that. It's a great product, man. I mean, it's amazing that these products came out, number one, and I guess in a low interest rate environment, you have to get creative as being a bank, right?
That's exactly, yeah. It's tough, attracting people. We have some great rates on our banking products.
You do.
But, it's tough getting people excited about 2% over 5 years on a CD. So, and you got to get creative. And again, we create these products not just on a whim. We listen to the clients that are calling in and listen to people, and they tell us, this is what we would like to see, and we go out and try to create some products that we know are going to be received in a good way in the market. So, and this is another one it's been pretty popular, like you said. We're reaching the funding deadline. It's in a couple days, so clients, callers do have, your listeners do have some time to open, but they've got to act pretty quick. And I'm not a hard sell kind of guy, but if you want to get this done, it's going to have to be in the next couple days, because this is going to be our last focused commodities CD. Sometimes we'll come out with a second issue, but on this one we're not able to offer another issue on this. So this is one time only. And
folks, you can give them a call at 855-750-4051. That's 855-750-4051. And what's so cool here, folks, is that you call them, you'll open an account, you'll fund the account, and they have, as Chris said, there's many more products that they have. You've heard plenty of calls in here just about the platinum bars themselves, okay? What ends up happening, if you're in the metals market, and you don't want to pay these huge premiums, and you see all these TV ads they claim that they're going to give you something nice. Well, guess what? Make sure that you give EverBank a call first to go through it, because the premiums that you're going to get charged and many of these other products, you'll never get back.
Right.
Sad but true. Do you know what I mean? But
and make sure they call that number, and if when they mention that they heard about us on TFNN, because we like to keep track of where everybody's coming from. So we certainly appreciate it.
We certainly understand it. We appreciate the business, Chris. Well, listen, you have a great one, a safe one. Of course, we look forward to speaking to you again. I'm looking forward to those Fed minutes tomorrow. We'll see who the Bulls and Bears are. Have a great one, Chris.
You too, sir.
Stay right there, folks. We'll come right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from EverBank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.